So there's been lots of talk lately about a possible market crash coming, and not necessarily about whether or not it will come, but more on how big it will be and the potential for how long it may last, to a point where even Warren Buffett himself has been discussing his top 5 ways of not only weathering the storm when it comes to market crashes, but giving people a little bit of a help and a head start, maybe, guys, when it comes to how we can prepare for a possible market turn down. So we're going to go through Warren Buffett's top 5 ways to prepare for a market crash. Neil, you have got number 1.
Absolutely. And look, the Oracle of Omaha himself, he's been around the block a little bit. And one of the things that he says is, hey, number 1, keep a lot of cash on the sidelines. This is a pretty simple one. If you're anticipating a market crash, what is that going to mean? It's going to mean you probably want to be not fully invested. So when the market does come to the downside, you do have opportunities to pick a few things up, and that's what it's all about, guys. I mean, you looked at what happened with the pandemic, and you saw stocks like Pepsi here went from like a 150 down to 100. If you don't have cash on the sidelines, if you're fully invested, you're basically going to take that entire hit, and then B, when it gets down to like $100 and is a bit of a value, you're not going to be able to put any money into it. So if you're anticipating that coming, you generate that cash by selling, or maybe a little bit slower to put money to work or new money to work. So that's tip number 1, guys. Keep a lot of cash on the sidelines.
Okay, guys, tip number 2. Warren Buffett's been a big, huge fan of never taking on margin, especially if you don't need to. And what margin is, and again, I just have a very, very simple, explanation here. This is your funds. So you have, let's just say each one of these stacks is $5,000. So you have $15,000 to invest. Well, you can borrow against your current positions with a margin and triple up or double up the amount of money that you have in there against your current position. The only problem with that is, and again, we can look at Tesla, we can look at any stocks we have back here, is that when this goes awry, then your maintenance margin, you're going to get called, and all of a sudden, all this money that you borrowed, if you don't have enough funds in place for that, then you're going to have to cover. So you turn a bad decision and make it even worse. So right now, again, tip number 2, avoid buying on margin. Only buy what you can afford, so that if this market dip does come, Brendan, you do not have to worry about being long and losing more money than maybe you had even in the first place.
All right, great. First 2 tips there. Again, guys, we're going through Warren Buffett's top 5 ways for you to prepare for a market crash. Make sure you stick around for number 5, because that one is the key and something that we can do on a daily basis as well. So stick around for number 5. Number 1, keep a lot of cash on the sidelines. Number 2, don't use margin when markets turn to the downside. Number 3, don't speculate or chase returns. So there's that saying of buying high and then selling higher. When a market starts to turn to the downside, you gotta wait for key levels. You have to wait and be patient for your levels to come into play. The last thing you want to do is be caught with an average price in a position that is well above where the current market is trading. So number 3, again, don't speculate and chase returns. Guys, let's keep going here. Number 4.
Yeah, number 4 here, and I think you guys will probably guess this if you know Warren Buffett, hold high-quality businesses. So what does that mean? What's high-quality business? What are we talking about? You want a competitive advantage. That's going to be number 1. Do they have a competitive advantage? Do they have a good management team? You want a solid management team. An example of that might be like if you're looking at the banks, you're like a Jamie Dimon who's a king. Look at like a JPM in that particular frame. And the third one, guys, understand the business so that it's simple. Keep it simple. And that's why, look, I cheated with this when the pandemic was driving some stocks to the downside. I was already looking at Pepsi, right? So you keep it simple. Everyone understands the wealth of Pepsi. In terms, well, they pay a good dividend. Of course, they have an entire product line which favors it with Coke, which is just beverages there. So they have a nice wide distribution of products in their catalog, so that when you get a recovery, you know where the money is going to go into it. And the other thing about the Pepsi is like, you're not going to see as harsh of a drop down when the pandemic hit as opposed to some other names. And then part of that is going to be because it's one of those staples. Now, you do weather the storm with something like this, just keep in mind, when growth comes back, it might not be the best growth name in the entire world, but they've got a stable 3% dividend. They have a history of paying it well. They're a simply run company there. But those three keys, guys, do they have a competitive advantage? That's a big one. Look at your Apples of the world there. Good management team. We talked about that in the banking sector. Maybe you like a diamond. And then, of course, guys, understand the business. I think most people can say, well, some consumer good business, you probably understand it pretty well because we're all consumers, Sean.
Yeah, no, for sure. And again, yeah, his top holdings, right? Apple, businesses that make a lot of sense for a lot of reasons, right? Coke, Apple, some of the big banks as well. Understand where the investment comes from and what you're investing in. The fifth tool here, or tip, I guess, mentally prepare and do not panic. So I just took this little screenshot here. And, when you're looking at the market, especially when these arrows start going this way, make sure that you're prepared. You understand that you do have a game plan here. What am I going to do moving forward, right? Do I expect a dip? Do I, what kind of levels am I looking at to get back in? I actually have here, this is the triple Qs. So this chart here, just to show you, you do get triple Qs, again, the NASDAQ 100, right? Like you could just see here, some of these dips, the market, even though we're ripping and we're at all-time highs right now, there are dips that happen in this market. So be prepared for some of these dips. It goes back to point number one, have some cash on hand so that when these dips do happen, you're able to take advantage of them, right? The market just doesn't go up in a straight line, although it looks like it right here. There are always going to be some pullback. So whether or not we pull back to the 50-period moving average now or not, whether or not we continue to go lower, find some levels, understand that it is going to dip, but be mentally prepared because honestly, if you make decisions that are, quick ones, they're just spur of the moment, I guarantee you, as far as investing is concerned, you're going to look back and say, maybe I shouldn't have liquidated that position. Maybe I should have only got out of half. But mentally prepare, get yourself a game plan ready to rock and roll if and when there is a pullback in the market.
It's such a key point, and one that, as we mentioned, you can implement almost on a daily basis. If you have a plan, you can also have a sound mind. So it's so key when the market is coming to the downside, because as Sean was mentioning, the market doesn't only just go up. There are moments when we do get pullback. So if you are mentally prepared, you can act accordingly and not be pushed or pressured into making decisions that you might later regret. Let's run through them one more time. Number one, keep a lot of cash on hand so that when you get great buying opportunities, you can act on those. Number two, don't use margin when the market's coming to the downside. Make sure you can trade with and invest with money that you are willing to lose. Don't speculate or chase returns was number three. Number four, only hold high quality businesses. Such a key point. And number five, probably the most important one that, again, we can use, guys, on a daily basis, mentally prepare so you're not scared out of positions. There we go. I'll look at Warren Buffett's top 5 tips for avoiding making bad decisions during a market correction. Here is Valeria.
Hey guys, thank you for this informative content. Dear viewers, please subscribe to this channel to see more great videos.